Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, August 22nd, 2016. All right, let's start off by looking at the ES Daily. These are the Triton Waves. Actually, they're a new version of them. And I've put wave 2 through 5 into a log scale, so you can just see it's either above 0 or below 0. But I just use the daily as a guide, and I'm using this scale right here, the first wave. Let me see here. So this guide tells me that the bottom three waves are above 0. This wave is giving me a caution sign. When one is above and one is below, that's a little cautious. When this is below, you don't really want to be long. This went above 0 just before Brexit. And if I expand this was the Brexit trade right here. And this was above 0 just before that. And that's why when it came down here, it slammed into this exponential moving average, and then took off and confirmed it right here. Now what I'm going to do is go to a smaller time frame, and you'll see where the same line comes in. I'm going to keep this line. So if we look at the next lower time frame chart, the 144 minute on the ES, this blue line from the daily shows you that everything is green lighted. However, this is now in a compromised position, and this is giving you a cautious look because wave number 1 is going below 0, and at this point on 8/16 at 10 o'clock at night, it goes completely below 0. So from this point on, it's a little bit cautious. So now we're going to break this down into an even smaller time frame. So now we're looking at the 21. Now this blue line is still representing the go ahead to the upside so from cautious to up on the daily. But let's look and see what happens on the smaller time frame chart, being the 21, that the second set of waves already signal a caution to the downside, and in fact it went down. So if you're day trading 1 or 2 day like 1 or 2 day trades, 2 or 3 day swing trades, you want to follow the general pattern are you going to follow the daily and then use the smaller time frame charts to confirm it, or are you just going to swing up and down either way? In this case, if you were to the upside, you would have cautiously bailed out here and waited for another buy signal that came in about 2.5 days later. And it would have given you a margin of from 2174 to 2190. And then again, caution when this comes in below 0, and indeed it fell down 10 points and then came back up again. Or if you are an extreme day trader, you could just be following these moves right in here, just using wave number 1. And I'll show you on an even smaller time frame how to do that. Now this is what actually happened on Friday. These two hash marks are the Thursday closed, and all of this across here was Friday. If you ignore the first one because it goes up and down too much, but check out this at 9:30 at night on the second set of waves. Right down here, it went below at 2182, and then you would cover at 9 o'clock in the morning, 2174, and it went up to 2182. This is like if you're really on top of it and you're a day trader. So I use the smaller time frame chart here to bail out on longer term plays. So if this is going below right here at 10:30 in the morning, and I'm looking at this wave going down, I'm going to use this wave to bail out instead of waiting for it to come all the way back up. So you save yourself like 2 or 3 points. But this is a nice little move between 2178 and 2182, and when this gets a little cautious in here, it's good to bail out here. And then this is kind of like the end of the day. If you want to take a risk, you know, like down to the EMA, fine. But right now, I'm cautious to up on the 377 volume. Back to the 21. Let's get rid of these lines here, the session breaks, because they're interfering. On the 21 minute, it's kind of like neutral territory. All right, let's take a look at bonds. Okay, this is the daily bonds of ZB, 30 years. It's following this trend line, 55 exponential moving average. Now, all of these waves are above zero, and they have been for a very long. You can go all the way back here. They've been zigzagging above zero for, wow, it actually wasn't below zero since 1985. Wow. Okay, so when it was 66. So this is if you're a really long-term holder, but most people aren't. And then you have these major moves in 2012 down to the moving average. I call this purple one is called the Triton minor wave. This is the major wave, so I'll just call it major and minor. So this is down to the major wave for like 3, 4, 5 months, and then it takes off again in May of 14. Hesitates a little bit here, but then the second wave picks it up, the third wave picks it up, and I'm just a little bit cautious because it's sitting right on the 55 minute exponential moving average. So let's look at a different time frame to see what's going to happen right here, to see if it's going to launch up from here or possibly go down. So here we have the 30-year bond on the 21 minute, and you can see by this the best wave to follow here. The best wave is wave number 1. You can see in the way there are many waves, and I look at them all. I look at them all the time, and I follow the ones. It's basically like surfboarding on the ocean. You don't take every wave, but you take the ones that are going to give you the ride. So this number 1 wave is the one that's acting correctly right now, all the way back to let me see, the beginning of August. Actually, before that, beginning of August. Okay, it brings you down here, up here, and these are all good for. Let me see, 73.25 to 71. So like between 2 and 3 point moves, and these are the. Let me highlight the session breaks. So these are like day and a half to 2 day moves, and we move up here for 2 or 3 points down here. So right now, even though on the, let me see if I can move this. Okay, can you see both of those? Okay, so even though this is sitting right here and it looks like it wants to launch to the upside, the 21 minute is saying something different. The 21 minute says it's not finished on the downside because this just started on Friday, and I think it took a pretty good hit. Let me see what kind of hit took on Friday. it took a 30 tick hit on Friday. So we may have a little bit of an up move back into this congested area where the major and the minor are crossing to the downside, and the 55 is crossing both of those to the downside. So I'd be very cautious. I wouldn't be a buyer on bonds. I would cut loose and maybe even do a little bit of shorting, especially if it pops back up into this area, because these waves here are substantially below zero. So here's also another play. If you're looking at the 1597 volume chart of the 30-year bond, the ZB, and you see that it's coming down. Actually, this started at 7:30 on Friday morning at 171.15, and you're looking for a place to get out, and you don't know whether it's a point is going to make it or maybe it's going to do more or bounce back. Then I've overlaid the 55-minute tick chart here, and if you're looking at the first waves on both of these, then this actually starts coming down at 6 o'clock in the morning and comes back up here. So this is these smaller time frames from the 1597 volume to the 55 tick, a more refined move, still captures a really nice chunk here. So this is like 171.25 down to 170.20. So that's if you can use an entrance for more secure entry on a higher time frame chart and use a lower time frame chart or a smaller wave to get out. So right now this looks like this is a cautious, since all these waves on the 1597 are below zero, even up to the smaller one. And the smaller time frame chart is the 55 tick are all below zero except for this. This is just a reactionary covering. So right now I'm looking for a little bit higher, and then we'll have to see what these waves look like once it gets up to 121, possibly 171.12, 172.01. That's all I have for tonight. I hope you have a great evening and have fun trading this week.